I'm Jenny Brown. Welcome to this week's MFB News. I hope you're doing really well. Lots of good content for you this week. We're going to talk a bit about what's going to be happening with interest rates over the coming months. We're going to give you an update on what's been happening in the lending market, both in terms of pricing changes and criteria changes. We're then going to talk a little bit about something called conditional selling, a practice which seems to be becoming more prevalent in the estate agency market, so what it actually is and what it means for you. And then lastly, we're going to run through the latest data released by the Mortgage Works with regards to their buy-to-let barometer, where they talk about landlords' kind of confidence in the market over the coming 12 months. Okay, so first of all, interest rates. So look, there's a really strong likelihood, in fact the predictions are 105% likelihood that the MPC will increase base rate when they meet in the middle of this month. Now, why is that? So we all know that inflation has been going up very sharply, was at 5.5% when the data was released from the ONS in January. Some were predicting it to peak at 7% during the course of the first half of this year. However, what we've seen the fallout of the war in Ukraine and Russia is that the cost of Brent crude oil essentially has been rocketing, and actually as of this morning it was over $108 per barrel. So what that means is the cost of oil is increasing. That then kind of echoes and reverberates across to so many different things, which ultimately then impact the cost of things, which pushes up inflation. So what we're expecting is that the MPC will be looking to make a strong move in their March meeting, and there is a very strong prediction, like I say 105% in fact, that interest rates will be going up then. Now look, if they don't go up in March, there's no meeting in April. There's a further meeting scheduled in May. A few days before that, the inflationary report will be released. So what we're expecting is that actually if there is no, it's very unlikely, but if there is no increase in March, then economists are then predicting there will be a 0.5% increase in May to compensate for this. Now, in terms of lender updates this week, first of all, MOLO have made some positive changes to their lending criteria. So I've now increased the maximum number of mortgage properties a borrower can have in the background from 10 to 20. Now, when MOLO first came to market, they were capping the maximum number at 4. They've increased this, like I say, to 10, and now it's at 20 properties, which is really great news. What they go on to say is that there's no limit on the number of unencumbered properties that you have in the background. It's just 20 mortgage properties. And this extension of their criteria is available to both for borrowers who are people and also limited companies. And it's available on their full product range, including their 5-year fixes. Essentially, it's just a huge change in policy. Now, in terms of their background portfolio criteria, and this will apply to all portfolio landlords, those landlords with 4 or more distinct mortgage buy-to-let properties in the background, what they're looking for is as follows. The overall lending across the whole portfolio can be at no more than 80% loan to value, and they do require the rental income from the properties to cover the interest payments, assuming an interest rate of 5.5%, but they just need it to be 100% of that figure. So in terms of their background rental calculation and loan to value, they're actually incredibly generous. Lots of other lenders in that space are capping the numbers back down at sort of 75% loan to value across the portfolio, 145 at 5.5% coverage. This is really good. Now, as I mentioned, and as I said, MOLO can lend to individuals and limited companies. They're a relatively new lender, which means that I would say their lending criteria is still fairly tight. They are broadening things as time goes on. In terms of the experience of dealing with them as a lender, we really like them. They're very quick and efficient. They have a great kind of technology solution to make mortgage application processing very slick. So they're a great kind of outfit. So yeah, it'll be interesting to see what else they come up with in the coming weeks and months. Now, in addition to the changing in criteria, they have made some reductions in their pricing on their HMO 5-year fixed rates. The rates here now start from 3.2%. They've made reductions in their limited company 5-year fixed rates at 80% loan to value, so pricing here now from 4.15. But they have made some increases in rates to counterbalance that. Across their individual 65 and 75% loan to value fixed rates, these now start from 2.65%. Now, Foundation Home Loans have made an interesting change in policy. What they've done is extend their expat mortgage offering to individuals as well as those people who are borrowing through limited companies. So previously, they would only lend to expatriates if they were borrowing through a limited company vehicle. They're now saying that actually they're happy to lend if their borrower is actually a person as well. Now, in terms of where this sits in the market, it's an interesting one. There are lots of lenders who will lend to individuals who are expats, but actually there were a greater number of lenders who were willing to only lend if there was a limited company structure involved. I was trying to kind of think about why that might be. And if I'm being really candid, I can't think of an honest answer. I'm sure there's a really good reason, but I don't know what that is. But it's really great to see Foundation kind of coming into the personal space there. Now, what they've also said is they've actually released a specific range of products for expats who are looking to purchase or remortgage a buy-to-let property. And this includes options for green mortgages, so property with EPC rating of A to C, short-term lets, so Foundation Home Loans are one of the very few lenders, as well as having a holiday let offering, also actually allow you to let on to Airbnb. And also they have extended this expat offering on HMOs as well. So really, really interesting move from Foundation Home Loans. At the moment, I think it's fair to say that some of the lenders are finding things to be a little bit quieter than they would like. So we are expecting to see lenders try and increase their lending policy, their criteria, to sort of counterbalance, I think, the higher interest rates they're going to be charging going forwards to really kind of keep business volumes ticking along nicely. Now, in terms of pricing movements in the last week, it's been another busy one. We've seen Barclays increase some rates. Accord have increased their rates by up to 44 basis points and 0.44%. We've seen the Skipton increase rates by up to 60 basis points, the Bank of Ireland by up to 30 basis points. The majority of West Bromwich rates have increased by 20 basis points. Santander have made increases of up to 50 basis points. And in the more specialist end of the markets, the lenders who are kind of not borrowing off balance sheet but through the wholesale markets, we've seen LendInvest increase their rates now, and also Pepper have made some increases on their product range as well. So it's been interesting, I think, to see that we've really seen the high street clearing banks, the balance sheet lenders, pushing pricing up. No doubt, I can only imagine that this is really being driven by an expectation of a base rate increase again in March. Obviously, if they're using savers' money to lend out to you and they're expecting to have to pay their savers more money because base rate has gone up, they're going to pass on the cost of that to the mortgage borrowers, which means the pricing just increases. Okay, now somewhat disconcertingly, there's been a reported increase in conditional selling practices within certain estate agents through the country. And this tends to be the larger chain type estate agents rather than the small independents. So what is conditional selling? So conditional selling is where when you go to put an offer in on a property, the estate agent will potentially refuse to put your offer across until you maybe speak to their mortgage advisor, agree to use a certain solicitor's firm that they're recommending, that kind of thing. And this practice, I guess at best it's unethical and at worst it is actually illegal. So if you are going to be in the market for buying a property and an estate agent is kind of saying that they won't put forward your offer without speaking to their mortgage broker, for example, or taking an insurance with them or any of those things, I would ask you to, if you're uncomfortable with it, obviously if you want to speak to their mortgage advisor, that's great, but I would encourage you to refer them to the Property Ombudsman Code of Practice for residential estate agents, and refer them to section 9C, which sets out the conditions around this. So I'm just going to read this out to you. So by law, you cannot make it a condition of passing on offers to the seller that the person wanting to buy the property must use services offered by you or another party. You must not discriminate or threaten to discriminate against the prospective buyer of the seller's property because that person declines to accept that you will directly or indirectly provide related services to them. Discrimination includes, but is not limited to, failing to tell the seller of an offer to buy the property, telling the seller of an offer less quickly than other offers you have received, misrepresenting the nature of the offer or that of rival offers, or giving details of properties for sale first to those who have indicated they're prepared to let you provide services to them. So essentially, this is really just to kind of stop estate agents not giving a great service actually to their sellers that they're representing because they're not putting forward a fair representation of the offers on the table. Some of the stories we're hearing about with this are actually really quite horrifying. So just know that if you are in the market for a property and you get any kind of pressure from the estate agent, that sits alongside of this, just refer them to this legal document. The Mortgage Works have released their latest buy-to-let barometer, which is where they've gone out, surveyed a large number of landlords who in turn have discussed how they're feeling about the market and what their plans are for the coming few months. I always say this, but I really like these reports because actually it's information which tells us what landlords are thinking, how they're feeling about the market and just being a landlord more generally. And the results are actually quite interesting. So this is covering Q4 of 2021, so just keep in mind that things have moved on by up to, between 2 and 5 months since the landlords would have done this survey, but it's still really interesting. So 14% of landlords are planning to buy property in the next 12 months, which is down 5% from Q3. Conversely, 24% of landlords surveyed plan to sell in the next 12 months, and this is an increase of 5% from Q3. Now, when I read this information, I was really just thinking, I wonder what's driving a larger number of landlords wanting to exit and less people wanting to kind of increase their portfolio. And I feel like it really kind of coincided with the news about the Section 21 abolishment. And I think a lot of landlords were incredibly bruised by this information and were feeling pretty disenfranchised. So I suspect that's kind of tied in. Now, whether actually all of these landlords will sell their properties, whether that many landlords would even buy properties, it remains to be seen. But it's just interesting to really give you a feel of the sentiment of landlords at the point when the survey was conducted. So moving on from there, look, 52% of those who are planning to buy are looking to use a limited company vehicle when they acquire their next buy-to-let property. Now, that's an interesting figure in itself because it's very different to the data that we see at Mortgages for Business. So for us, roughly between 80 and 90% of all new purchases that we finance are done via a limited company vehicle, which is obviously much higher than the 52% that the Mortgage Works data has cited. Now, I can only assume from that that's because as a business we are very strong in the limited company market. So we were doing limited company lending back when I started 16 years ago now, so a long time ago, way before Section 24 came in and limited companies became very much the vogue. So we were very established in that space. We naturally attract that kind of borrower, those types of inquiries. But actually, yeah, I found 52%. I mean, it's a strong number, but actually I feel from my perspective it's surprisingly low. Now, lastly, in terms of landlords' optimism, so this is actually really positive. So what they're saying is that optimism for their own letting business remains in line with the 5-year record high that was recorded last quarter, which is 47%. And 48% of landlords were confident in the prospect of a capital gain. 56% were confident in rental yields. Backed up that 56%, I feel, were reporting an increase in tenant demand. So actually, for those people who are letting properties at the moment, they're feeling very comfortable that the property values are going to be robust and increase, and the majority of landlords are also very comfortable that their yields are going to hold firm or even increase, and the properties, the demand for them is increasing. So very, very positive, which kind of flies in the face of the data that there's an increasing number of landlords looking to offload properties, which again I think comes back to maybe the disenfranchisement that some landlords are really feeling at the moment because of the legislation that's continually been put upon them. And that concludes this week's MFB News. Thank you, as always, for joining us. If you do have any questions, please do give us a call, 0345 345 6788. Have a look at our website. There is an absolute abundance of information there for you. Please do look after yourselves. Have a really great rest of the week and weekend. I believe the sun's going to be putting in an appearance again for us over the weekend, so something to look forward to. Until next week, look after yourselves.